Hello and welcome to another segment of the East Brunswick Advisory Health Council's Wellness Spotlight. One afternoon, a plumber was on my adjusting table about to receive a chiropractic adjustment. As he was settling in, I asked, "Steve, are you comfortable?" He responded, "Yeah, I got a few bucks." Financial abundance is related to wellness. There's less stress and greater peace of mind knowing you have the resources that support your values and needs. Financial wellness opens up a wider range of options and choices for your family and for you. If a person's body and mind are sick, they seek help from a specialist that knows how to help them become and remain healthier. But what if your finances aren't in the best condition, or you're doing pretty good and want to be more proactive to protect what you have and strengthen your financial resources? Well, in both cases, you'd seek help from a specialist to help you become, as the expression goes, well-heeled. With us today is a local specialist who can help us achieve higher levels of financial wellness, Naya Pearlman. Naya is a tax attorney at Kim Pearlman LLC, a solo practice in East Brunswick. She has a law degree from the Benjamin L. Cardozo School of Law and an advanced tax degree called an LLM from the New York University School of Law. She is also of counsel at Fine, Such, Kahn, and Shepherd in the firm's tax, trust, estates, and corporate departments. Naya, welcome to the Wellness Spotlight.
Thank you for having me.
Naya, tell us a little bit about yourself.
Well, I live in East Brunswick with my husband and 3 children. I grew up in Middlesex County. I went to school in Middlesex County in high school, and went to college in Pennsylvania and law school in the city.
And you're an attorney and you're an accountant?
Yes. I have a JD and an LLM, which is an advanced degree in taxation. In addition to my law degree, wrapping up my master's in accounting, and for a big part of my career, I spent time working as in the tax firm of a CPA firm.
Is this something that was your aspiration from the time that you were young, or did somebody influence you? What made you get into this?
I wouldn't say it was my aspiration. My original aspiration was to be a doctor, but you know, by the time I took AP chemistry in high school, I realized that dream quickly went away. You know, when I went to college, I decided that I wanted to pursue law, and then once I got to law school, I took a course in tax law, and I loved it. And I thought that it was a perfect fit for me because I always loved math, and I wanted to do something that was quantitative, and it was a great combination of law and quantitative skills.
Naya, when people think of wellness, they think of happiness. So what do you say to people who tell you that there's more to happiness than money?
I would absolutely agree with that statement that you know, money in and of itself doesn't bring happiness and fulfillment, but money is a means. And if you realize that the management of money and the planning of money can allow you to meet your needs and do the things that are important and meaningful to you, such as support your loved ones, pay for your children's education, retire when you plan on retiring so that you can spend time with your family, and travel, do the things that are important to you, then money can contribute to happiness. And I believe that it's the planning of money that promotes financial wellness.
I've heard many people say that money is energy, you know, and that it really gives you the ability to be able to have more options in life.
Yes, I absolutely agree with that. You know, in planning for retirement, in planning for your children's education, in planning for your estate, you're allowing yourself to protect your future and feel much more secure about not only your future, but others around you.
What do you think is the relationship between financial security and wellness?
You know, financial security is having the ability, having the resources to be able to support yourself now and in the foreseeable future. And it's not only a picture of your finances, but affects your state of mind. So it's not a surprise that during these difficult times, many people feel financially stressed. And that affects their wellness. That affects the ability to take care of themselves and the others around them.
I know when people are under stress, it affects you mentally as well as physically, even socially as well. And people are having a challenging time today. That's no secret. What do you say to people who tell you that they're just having challenges making ends meet? They can't even think about the future because they're having a tough enough time in the present.
You know, I would tell those people that, first of all, there's planning that you can do for today, for this year. And by taking these steps and taking the step for the current year, you're helping yourself for the following year. And it's just in each incremental step, allowing to plan more. And as you plan for this year and the next year, then you're planning for the future. And I would say that to a lot of those people, if you can sit down with somebody, evaluate your needs, and discuss your options, you can help relieve a lot of those anxieties.
Now, the work that you do, how does being an attorney and an accountant help you more than just consulting, for example, with a tax attorney or just consulting with an accountant?
You know, I'm a tax and estate attorney, and by having an accounting background, I'm able to basically advise clients on their returns, their tax returns, which a lot of attorneys may not be comfortable doing. In addition to that, I look at their tax returns. I work with them on their overall current situation. So it's beneficial to the client to have somebody that understands the accounting, the tax accounting, as well as the tax law.
What would you say, based upon your own experience, would be some of the biggest mistakes that people would make that would threaten the resources that they have already?
Well, I would say that, you know, for example, in a situation where you have, you know, a high wage earner, maybe perhaps with they're in a family with a non-working spouse and children, they may not be thinking about their current situation because they feel well off now. But there's a threat if something happens to that high wage earner. In a situation like that, it's important to take action and plan for those contingencies, because if something happens to that wage earner, they may not have enough assets to support the family's current lifestyle. And in a case like that, you know, you may want to purchase life insurance or other financial products to protect the family's future.
A disability policy,
exactly.
You know, in your own occupation.
Exactly, and in purchasing, you know, things like life insurance, it's important to consider how you want to title them, whether it's through individually or through a trust, because you want to do it in the most tax-efficient manner.
Who are the types of people or companies that you tend to attract? Or do you handle individuals, or do you handle businesses?
Both. You know, I've worked with a wide variety of clients in my past, but I definitely work with both individuals, businesses, fiduciaries, you know, trusts. I work with estates, so the whole gamut.
How does someone know whether or not they need to speak with someone like you?
Well, a lot of the times it starts as simple as just a conversation, consulting conversation. And a lot of my work also stems from evaluating their tax returns. You know, it's just as simple as, you know, them showing me their yearly tax return and asking me, is there anything that they can do to minimize their taxes? Is there anything that planning that they can do, you know, for education planning that they can take advantages of now. So it starts often with looking at the tax return and then, you know, going from there.
What are some of the most often missed strategies? You know, where do people leave money lying on the table, lately where you can help them?
I often see people missed opportunities for year-end planning. You know, a lot of people think, oh, I just need to get my tax return done in April, and they go see their tax advisor, February or March. But there's a lot of opportunities that can be done at year end, and especially for someone whose income fluctuates from year to year, you can really be able to save a substantial amount of money by having a projection for the following year. So that's really when I think I encourage more people to see somebody at year end.
How many years have you been doing this, Naya?
Almost 10 years now.
Wow. Can you tell us, from your experience, can you share a case that you had where you really made a profound difference in someone's life as a result of the advice that you gave and the financial security that it afforded them?
I was working with an individual who was a lawyer and who, again, was a partner, so their income fluctuates drastically. They may have a case, and if the case is successful, they earned a substantial amount, and then they may have a year where it's a very bad year and they earn nothing, And a lot of times, if you are self-employed, you're not getting a W-2, you're getting a K-1, or what's called a K-1 from the partnership. And in this scenario, he didn't realize that year-end, by prepaying, he had known that the following year they were doing much better, and he did not realize that if he had prepaid a lot of his state taxes, because as individuals we're cash method taxpayers, that if he had prepaid his state taxes, that he was going to save $150,000 of taxes. And I looked at his projection, I made the recommendation to him, and he was very happy with the result, and he prepaid his state taxes. It was a difference between, paying, by December 31st or paying by January 15th in the fourth quarter, and it's something simple as that.
So it sounds like it's very important to be informed about tax law. I think the only thing that most people know about tax law is that if you don't pay your taxes, it's against the law.
That's true.
What more is there that people need to know?
It's, again, it's very important there's been so many changes in the tax law, so it's very important to, if not understand them, at least ask your advisor about how it's going to affect you. Another recent change has been the new Medicare tax. And a lot of people I talk to...
A Medicare tax?
New Medicare tax, but it applies to your investment income and to certain passive income for taxpayers at a certain threshold. And a lot of people don't understand, that I've spoke to, don't understand about this Medicare tax. So they're going to be in for, if you're subject to this tax, you're going to be in for a surprise when, in just around the corner, April 2014, if they owe significantly more. Not to mention that there could have been, there's missed planning opportunities to have to minimize those taxes.
There's a lot of people out there that are in debt. They're not only trying to make ends meet, but, they're kind of shoveling sand against the financial tide, trying to keep their heads above water because they have debt. They're underwater on their mortgage in their house. They have large credit card debt. Do you have any special advice for people like that?
Well, I can certainly work with clients and help them try to achieve their financing goals by looking at all the loan options that are available to them, and in addition to that, I try to help clients understand the tax consequences of these different loan options, So if I'm working with an individual that needs funds for home repairs, one option is to take out and tap into their home equity line if they have some equity in their home, and because that offers some tax benefits. That by doing that, they can take advantage of the tax deductions on the interest of that loan.
So if you take a home equity loan out, then
And use it for home improvements.
and use it for home improvements, then you're paying less money in interest
Yeah.
than you would if you just took out a loan from a...
Exactly. You're paying net out because you're getting the benefit of those tax deductions.
I see, and you're improving the value of your home.
Correct.
So when the day comes to finally sell it, hopefully you'll make out better.
Hopefully.
Okay, you have any other ideas?
You know, again, with loans, as you mentioned, with their credit cards, there's the possibility to look at whether you have a personal line of credit that you can take out that's offered at a lower interest rate, pay off those credit cards, so forth. But again, you have to look at the total picture and see what kind of loan options and interest rate environment it is.
But a lot of times that's, the rate that they get is going to be based upon a person's credit rating. What advice do you have for people who don't really have a sterling credit rating but want to make it better?
I mean, if it's possible nowadays with the low interest rates, the government AFR rates, it's great if you can make intra-family loans. If you can get a loan from a family member and draft a promissory note with the AFR rates, that's a respected loan for tax purposes. That's a respected loan for in the eyes of the law, and that's one way to help a family member and also get the advantages of these low interest rate environments.
Have you seen any change in trends in buying lately and how people are handling their finances now compared to, say, the way that it was 5 years ago? I remember the Mercedes 80s, and they called it the Mercedes 80s for a reason.
Right.
The McMansions that were being put up and people were driving big cars. Now it seems to be more minimalist. Have you noticed?
I've noticed the same. I think people are trying to be much more modest these days. They're not, a lot of people are not looking at the McMansions anymore. They're trying to be much more conservative and buying really only what they think they need and what's important to them. I've definitely seen people cutting back.
How does the real estate market play into this? Do you think that people, if people are considering doing something with money, in other words, whether to take out a home equity line of credit to fix up their existing home or to take advantage of the lower prices within the market and move to a new home, what do you advise people to do?
Well, it's such a, personal preference. The real estate market, the loans out there, the interest rates on these loans are great, but unfortunately not everybody can qualify for them. And even with refinancing, if a lot of times if you have equity in your home, it's one of the first things that people say, what interest rate are you paying on your current mortgage? And if you can get a better loan out there, refinance and save your monthly payments. But again, the issue seems to be, it's okay for people who have a lot of equity in their home, but the issue seems to be on the credit end where they're very stingy about the appraisals. But certainly, if you do own your home and you have some equity, you should look into refinancing if the interest rates, the current interest rates are lower than what you're currently paying.
Between kids that are graduating high school and looking forward to going to college, or their parents who are in the sandwich generation, or people who are in their golden years, who do you think is the most financially stressed these days?
I think it's, as you say, the sandwich. It's the young people who have children, as well as, or middle-aged folks who have children, adult children, as well as parents aging, because you now have to think about whether their parents have the resources to be able to support themselves to the end of their life, but you're constantly worrying about whether you're doing enough to protect your children's future.
And have a couple of dollars left over for yourself.
Yes.
So how do parents feel more secure about the future for their children or their parents?
Well, for parents of minor children, I can't stress enough the importance of having something as simple as a will. Every parent should have a will, and a will is not just a means of distributing your assets the way you wish to be distributed when you die, but it's a document that designates who the guardian would be to take care of your children. And if you die without a will, the state will decide who takes care of your children, and that's such an important issue. If it may be a very costly process for the person that you intended to take care of your children to seek guardianship. So to protect your children's future is something as simple as having a will protect their future, secure their future.
That I could see where that's very important. Are people taxed differently on the distribution of their assets if they have a will compared to if they don't have a will?
Well, if you don't have a will, your assets will be distributed according to the intestacy laws of the state that you reside in, the state in which you're a resident. And every state has difference in their laws. But yes, if you, in your will, you get to outline how it's going to be distributed. And unless the will says so, generally, the beneficiary may or may not end up paying taxes on what they get. But a will is what ensures that you will distribute, the assets will be distributed in the way that you wish to be.
Now, as far as kids going to college are concerned, now college can range anywhere from $30,000 to $65,000 plus $1,000 per year, and that's just for an undergraduate degree.
Yes.
Which in the marketplace today is a high school equivalency diploma. You need that to be able to move on and go to grad school or, get an entry-level position in most places. How do people afford that today?
That's a good question. Parents have to do what's best for them, and what they can do. Obviously, a lot of people are getting by, so it's hard for them to plan for their children's education. Certainly, one option is if you are able to save money, you may want to look into accounts like 529 accounts. There's other savings.
What's a 529?
A 529 is an education account. You can open up with various companies in different states, and in certain states it allows you the benefit of getting a tax deduction for the contribution to that 529 account. You open it up in your children's name, and it's basically a gift that you make to your child for their education. The account grows in an investment account tax-free, so you get the benefits of that tax deferral. And as long as you use it for, college tuition, education, books, so forth, it all goes tax-free.
And
to them.
Is New Jersey a state that allows you to do this?
Yes, New Jersey is in New Jersey. There's no state deduction like New York has, but New Jersey, you can definitely have a 529 account, and it's not income. The earnings are not taxable.
Does the child have to go to a school in New Jersey, or can the child go to any college?
No, they can go to any college, and it doesn't even have to be a 4-year college. It could be a 2-year community school. It can be a vocational school.
And does it cost anything to administrate a plan like that?
There is an administration. Those fees tend to be embedded in the overall yield, but you can look around to see what the fees are for each plan.
Let's talk a little bit about health savings accounts and flexible spending accounts. Today, I think the number one cause of bankruptcy is medical expenses, hospital bills. A severe illness can really cripple a person financially. And I understand now that insurance is covering less and less. Deductibles are getting higher, co-payments are getting greater, the amount of coverage is being reduced, premiums are going up for less coverage. Can you speak to the advantages to having a health savings account or flexible spending account?
Sure. I mean, as you mentioned, there's a lot of, payments that are not covered, your deductibles, and that's what a health savings account comes into play, for making payments that are not covered by your insurance. Basically, you get the benefit of the deduction and not have those monies be taxed. So if you can use a health savings account to make those out-of-pocket payments that are not covered by insurance, it's beneficial to do so. And
you could start it with a nominal amount of money, put in as much as you can financially afford, but I think it's capped, isn't it?
Yes,
a certain amount?
It is capped, and usually the yearly amount changes.
And the money you put in is tax-free?
Correct.
As long as you use it for health-related expenses?
Right. And I think that you can also use it for your vision, and it doesn't just have to be your bodily health.
Wellness care, things like that, it can be used for. What I know some financial advisors are recommending is to buy a high-deductible, high co-payment catastrophic plan, and then fund the health savings account out of the savings that you would recoup instead of buying that low deductible, more expensive plan.
I haven't heard of that, but I can certainly see why they would do that in light of that.
Naya, in the time that we have remaining, what advice do you have to give our viewers to end this year strongly and have more hope for the new year?
Simply just to get the advice of a professional, talk to a financial advisor, talk to an attorney, and if anyone has any questions, I'd be happy to speak with them. You can find me on my website at www.kimpearlman.com, and you'll see my contact information there.
Naya Pearlman, thank you so much for joining us on the Wellness Spotlight today. The information that you shared with us is certainly information that you can take to the bank.
Thank you.
This concludes another segment of the East Brunswick Advisory Health Council's Wellness Spotlight. I'm Dr. Ken Friedman, President of the East Brunswick Advisory Health Council, with Naya Pearlman, reminding you that wellness works when you work it.